Well, Marc Ostwald is a Chief Economist and Global Strategist at ADM Investor Services International. Hello to you, Marc. Now, this is a remarkable achievement, isn't it?
It is a remarkable achievement. On the other hand, it's not really that surprising. Growth in trade with Asia has been expanding at a rapid rate for a number of years. The biggest surprise and growth in trade with the EU is really not that surprising, given that the EU is withdrawing from so many markets because it's simply uncompetitive, particularly things like petrochemicals, fertilizers. Perhaps the biggest surprise, though, is the strength of exports to Africa, and that is actually a very promising sign for the global economy. So that, and it's a trend I would expect to carry on into next year. The only problem at the moment is increasingly the sort of gripes that both the EU and the US have, and indeed Canada, about trade imbalances are also going to lurk with Southeast Asia particularly. There are growing trade imbalances there, with all of them running deficits in their trade with China.
You talked about Africa there, but also, of course, it's a clear shift away from the US towards ASEAN, towards the EU, and also towards Belt and Road markets, isn't it? You said you thought the Africa trend would continue. Do you see those trends continuing too?
Yes, I do. As I say, that the EU one may prove to be more problematic, but there are measures being introduced, like cutting the sales tax subsidies for solar panels, for instance, so that so that the EU market is not so uncompetitive. But yes, it will. It is going to continue, particularly with Asia and with the EU. It's less a question of how does the EU want to push back, and more a case of what's it actually going to do to make itself more competitive, above all in terms of its energy prices, because as long as energy prices and wages are as high as they are, pretty much anybody else is more competitive than the EU.
Strong export growth to Europe when it comes to high-tech and green products, isn't it? Does this signal, do you think, a shift away from cheaper goods towards a more higher value product?
Yeah, I mean, this is a trend which has been going on for many a year, and it's essentially the source of the biggest gripe that the US has, that they're encroaching basically on those high-end products, which the EU and the US arrogantly, I would suggest, always assumed that would be their domain, their area of influence, which was never going to be the case. And when you look at the production, particularly of things like intermediate goods, where China dominates the world production with, I think, about 75% market share, the writing's been on the wall for a long time, and it's above all testament to weak investment in the manufacturing sector, weak investment in technological development in manufacturing, in both in the EU and in the US, and hence this idea of rebalancing, in many cases, is simply not a viable one.
OK, Marc, thank you very much indeed for that.